30 million Americans are on Ozempic right now. They're losing 15%, 20%, sometimes even 30% of their body weight in less than a year. And for a lot of them, this is working. You can see visible results. The weight is coming off. But then there are the side effects that nobody is talking about. And in those side effects, I think there's one company which, as investors, we should be looking at. Now, let me first give you some context of what happens after Ozempic. Here's what the timeline looks like. At 3 months, the average patient has lost about 15 pounds. At 6 months, about 27 pounds. And at 12 months, the clinical trials are showing an average loss of about 15% of their body weight. Now, here's what's happening underneath the surface, which is what I think is important to pay attention to. Up to 40% of the weight that you lose on these GLP-1 drugs isn't fat, it's your lean muscle mass. Your body is breaking down the structural tissue that actually holds your skin in place. So by months 4, 5, and 6, you start to see it. Your face hollows out, you get the sunken cheeks, thinner lips, more wrinkles. They call this the Ozempic face. Your arms start to sag, the skin around your belly won't retract. At this point, 61% of GLP-1 patients experience what they call this mid-face volume loss. 50% get that skin laxity issues that I just talked about. And according to the American Society of Plastic Surgeons, nearly 40% of GLP-1 patients are now considering cosmetic procedures. Demand for body contouring after GLP-1 is up nearly 2,000%. And that's the setup. There's one company that provides the services to address all of these side effects after Ozempic, or rather, one company that I'm looking at that also happens to be public. That company is AirSculpt Technologies, ticker symbol AIRS. They operate under the brand Elite Body Sculpture. And what they do is this: they perform minimally invasive fat removal and skin tightening procedures. You don't need general anesthesia, you don't need scalpels, you don't have stitches, and you're awake for the entire thing. As a result, most people are back to normal in about 24 to 48 hours, so a very nice pain-free procedure, if you will, compared to the alternatives. They have about 25 clinics in premium locations. This includes Rodeo Drive and Fifth Avenue. Till date, they've performed 70,000 procedures, and this is since 2012. The average procedure costs anywhere between $40,000 to $45,000. So this is very much a premium cash pay business. AirSculpt also launched two new products that I think are worth paying attention to. The first is AirSculpt Smooth, which is FDA cleared for cellulite, and the second is AirSculpt Lift, which is a fat transfer alternative to fillers like Juvederm. Now that second one is interesting because it's a direct play on that Ozempic face problem. Now we move on to this company's financials. If you take a look at the stock chart, you'll see that the stock is very much in the gutter, and I think the numbers help explain that story. Revenue peaked at 196 million in 2023, and since then it dropped to 180 million in 2024, and on a trailing 12-month basis, we're looking at 158 million. That's a decline from 196 million to, as of right now, 158 million in about 2 years. During the same period, net income is negative 8.3 million in fiscal year 2024. The trailing 12 month is negative 18 million. EBITDA went from 20 million positive down to slightly negative, and gross margins have compressed from 63% down to 48%. They IPO'd at $11 in 2021, and as of last week, the stock was trading at about $2. That's an 82% drawdown. They've also got $84 million in debt against just $5.4 million in cash. So the balance sheet very thin, and they did a stock offering last year to raise $14 million just to pay down this debt. So by every traditional metric that you look at this company, this is a broken company that should be going straight to zero. But I think there's hope, a story for a turnaround here. Here's what's changed. In January 2025, they brought in a new CEO. That CEO's name is Yogi Jashnani. He spent 4 years as a chief commercial officer at Ideal Image, which is a direct competitor. And before that, he was at Capital One and Advanced Auto Parts. Now, those may seem like different industries, but to me, if you just look at this on a high level, the one thing that Yogi Jashnani knows how to do is scale multi-location retail businesses, exactly what we have here. And this is in a premium product category as well. They also brought in a new chairman, Mike Doyle, who grew Surgery Partners from 3 locations to over 175 locations. The insider buying is another interesting signal that I found as well in my research. In the last 12 months, insiders have bought nearly 1.25 million shares with zero sells. The most recent purchase was 88,000 shares right before the earnings when insiders were buying. And I think that's a very clear sign. When the stock is down nearly 82%, but you still have insiders buying, and that too very recently, that should be a reason why you pay attention. Something there, I think, is a clue. So now we move on to valuation. What are you actually paying for AirSculpt Technologies? Well, the current stock price is, let's call it right around $2. Their market cap is about $120 million, and their revenue is $158 million on this trailing 12-month basis. That puts you at less than 1x price to sales, about 0.7x. For context, typical aesthetics companies, so companies in this category, trade anywhere to the 2 to 5x revenue. So at less than 1x, you're getting quite a steal. Now, if you run the DCF on this particular company, to me, I got the value 0. So there's no real useful exercise there that I think gives you any kind of number that you could put weight on in terms of a discounted cash flow valuation. Instead, I have resorted to looking at comparables here. So if you say also ran a scenario here. So if you took the revenue at 158 million and you said, okay, what if this stabilizes somewhere here at 160 million? Then the market gives this about a 1.5x multiple, let's call it, in this range of 2 to 5x. You should still end up with the stock price of about $2.50. If, say, the revenue grows now, so if this new CEO can actually bring around some turnaround, so let's say the revenue grows by 10%, so the multiple now expands from that 1.5x multiple to, let's give this now a slight premium to 2.5x. You're looking at $5.70. So that's nearly more than a 2x gain from here, close to a 3x depending on where you actually buy the stock. Now, the stock is extremely underfollowed. There's only 2 analysts that are covering it, so not a whole lot of useful information you can get from analysts themselves. Next, let's take a look at the options market. The options market is pricing in massive movement. We have implied volatility at nearly 75% right now and climbing. Put call ratio is at 0.6 or 0.566 inside of Thinkorswim, hovering around somewhere that region, indicating we have a lot of call buyers hanging around. And if you take a look at today's stock price, we see a massive gap up. So all around, it feels like the stock, with it being hard to borrow, having high short interest, and technically being in the support zone, should be setting up for a nice move from this current region, especially when you look at the valuation. Now, let me be clear that there are some risks here. As I painted the picture of the financials, revenue is very clearly declining. We have no real guarantee that the CEO can turn this around. We have a successful track record, but beyond that, we are still waiting for him to prove himself. We see this GLP-1 tailwind, which, at least if you're like me, you see the ads everywhere, which sounds great in theory, but we have yet to see that show up in the numbers for AirSculpt Technologies. They have a lot of debt, they have a thin cash balance, and if revenue keeps declining, then this balance sheet could be a problem before the tailwinds kick into gear. Bear in mind, this is a $2 stock, or as of now, close to $3 with the gap up, but it could go straight to 0. Don't put in money in this particular stock that you can't afford to lose. I'm trying to give you a very clear picture here that the company's financials aren't healthy. This is very much a lotto type pick, but a lotto pick backed with tailwinds and personnel in charge who I think have the ability to deliver. Now, here's a summary if we were to capture both the bull case and the bear case. The bull case first. GLP-1 is creating real demand for body contouring. You're paying less than 1x sales for a premium brand. There's a new CEO who has relevant experience, and we see that insiders are aggressively buying. We have support near this $150, $2 range, potential up to about $5, $6 based on some of the valuation numbers we looked at. And the stock with its IPO price climbed much higher if we do start to break beyond quote-unquote fair value. The bear case is that revenue is declining, EBITDA is 0, Debt is heavy, the GLP-1 thesis still has yet to show up in the financials, and the stock could very easily not only revisit 1.51, but could even go lower down to 0. So the market, based off activity before today, had priced the stock for failure. If you think that's wrong, and you think 30 million Americans are losing weight on Ozempic will eventually need some of these services for their side effects, then Airs, to me, is a company ripe for the picking. Trading at less than 1x sales, it might be one of the most asymmetric bets out there in the small cap space. What do you think? I'd be curious to learn more about it. This is a new company that I'm diving deeper into myself. Hope you found this video helpful. Take care, everyone. Good luck trading, and I'll see you in the next episode.